What's going on, guys? Welcome back to the Financial Endeavors channel. Just wanted to give you guys an updated video explaining what I've been doing in the stock market lately. I made a big change to my portfolio due to the economic conditions and future indicators and the actions of what other companies have been doing. I eventually decided to sell some of the stocks that I've seen massive gains in so I could rebalance my portfolio more so to cash. This decision has effectively reallocated my portfolio to 70% into cash. And I calculated this by my account cost basis, not my account total. If I calculated it by my account total, it would have included all the gains that I've seen recently. And to me, it's not a exact representation of my cash percentage because of all those gains. But if I were to include my account total, including all my gains, I would have a cash position of around 35%. Either way, it's a huge cash position than what I'm normally used to be at. Normally I'm heavily invested in the stock market, but due to the indicators and factors that we're about to discuss, I decided to sell out of some of my winning stocks to rebalance my portfolio more so into cash. But before we dive any further, I need to state that this video is for entertainment purposes only. I am not a financial advisor, and if you need to seek out official financial advice, please seek out a certified financial planner and/or do your own research. I'm just showing you what I am doing in the market and not what you should be doing in the market. If you look at the S&P 500 chart, it doesn't seem like anything can stop the market these days. The S&P 500 is only down 11%, and the Nasdaq is actually up 0.47% year to date. These conditions are extremely alarming due to economists warning that GDP growth for the next quarter could decline as much as 40%. Unemployment is at the highest level since the Great Depression, and over 30 million people are currently unemployed. When you look at unemployment back in 2008, it was above 10%, and it took years for the unemployment to go back down to healthy levels. Unemployment currently is over 20%, and while yes, after the economy starts to reopen, we may see unemployment potentially drop very quickly. But other businesses such as restaurants and bars are actually planning to be operating at limited capacities, which means they will see less money on their bottom lines. In order to reduce expenses, they may continue to furlough employees or just decide to cut them altogether. Also, many big names in the financial space, such as hedge fund manager David Tepper, believes that this is the second most overvalued market he has ever seen. Although he does state that the lows that were seen in March 23rd may have been the bottom, it doesn't mean that stocks can't fall significantly down from current levels. Warren Buffett has also stated a negative sentiment and has sold out of all of his airline shares and noted that he and Berkshire Hathaway have not yet purchased any stocks during the market decline. This was due to Warren not being able to find any stocks that were that attractive. This was the opposite mindset for Warren Buffett during the 2008 financial crisis, where he told New York Times that in the near term, unemployment will rise, business activity will falter, and headlines will continue to be scary. However, I have been buying American stocks. Berkshire was taking that time as an opportunity to invest in stocks. However, this time it seems different for Warren. This has me thinking why these big names in the financial space aren't trying to capitalize on this market dip. And it's because they believe that the market can decline even lower. These investors are looking at the market from a risk-reward sense. With economic indicators pointing towards a negative outlook on the economy, they're thinking, why should I speculate and go against these indicators by going long the market? There is more evidence right now that there will be an impending recession and possibly depression than there has ever been in the history of the stock market. I feel like the risk-reward ratio of the stock market currently isn't very favorable to the upside, and that is why I'm allocating my portfolio more so to cash. I would rather take the risk of missing out on some limited gains towards the upside than risk missing out on a further market decline. If we take a rational look at the S&P 500, we have already rebounded to where we are only 11% off of all-time highs. One could say that if markets decided to continue to decline, we could potentially go down another 30 to 40%. So from a risk-reward sense, you are risking 30 to 40% to the downside for 10 to 15% gain to the upside. And this is not very favorable terms if you look at it rationally. As an investor, you need to put yourself in a win-win situation. For me, I'm putting myself in a win-win situation because if the market decides to decline, I'll have enough ammunition or cash to deploy into the stock market. However, if the stock market decides to continue to go up, then I'll just have my account appreciate in value. So, as you can see, it's a win-win scenario for me. No matter what happens, I'll be able to benefit in some way. And this is what's called hedging your position. This is truly a once in a 100-year event, and I just want to put myself in a position to where I can fully capitalize on this opportunity if the markets decide to go lower. The markets are irrational and will go in whatever direction it wants, and I just want to be able to benefit from whichever direction it decides to go. And if I'm right about the market going down lower, then it's going to be one of the best investment decisions I've made in my investing career by keeping cash on the sidelines to where I can deploy into stocks that are at ridiculous prices. Fortunes are made in recessions. I just want to give myself every opportunity to be able to capitalize on this event and for a potential market downturn to be less stressful for me. Please leave a like if you enjoyed this video or found it informational. Also, please subscribe to see my upcoming new videos, which I will be posting every day, where I will keep you updated on investment opportunities that will lead you to your financial endeavors.